Welcome to Retire Happy, the show designed exclusively for the backbone of our nation, federal employees. Join your well-sought financial advisor, Mamadou Bojang, and his dynamic team as each week we delve into the stories, insights, and tips about your federal benefits and retirement. Buckle up as we embark on a journey to demystify your benefits and retirement so you can make smart and confident choices and retire happily ever after.
Welcome back to Retire Happy with Mamadou. I'm your host, Alex, and today we're diving into the One Big Beautiful Bill Act. It is recent legislation signed into law on July 4th, 2025. And joining us is our resident financial expert, Mamadou Bojang. And we thank you for joining us, Mamadou. So, what are your thoughts on this?
Hey, Alex, it's great to be here to break the One Big Beautiful Bill Act. Oh my goodness, that is a lot to say, right?
It sure is.
My goodness, I'm super excited. It's a lot. It's big. It's a lot, and it provides a lot of opportunity, especially when it comes to retirement planning or financial planning. Right? It's one big bill that creates a lot of opportunities. So I'm super excited to be here.
Well, outstanding. And you are most certainly correct. It is a large piece of mostly tax legislation, and we're going to dive into it. So,
Sure.
What is the One Big Beautiful Bill Act, and why do we need to care? Why should folks out there care about this?
So, Alex, before we get going, I just want to make sure that our viewers know that this is not providing any tax advice, right? So we highly encourage you to go talk to your tax professional. That way they can get better advice. We're just here to give you some insights on the bill and then how that might actually impact you, right? So I just want to make sure that we point that out there. So, like I said, the One Big Beautiful Act, it's a sweeping, what I mean by sweeping tax reform signed into law, like you said, July 4, 2025. It makes many provisions in the Tax Cuts and Jobs Act that was passed back in 2017. It makes those provisions to be permanent, right? And then what does that mean for people that are, looking into retirement? Right. It introduces a lot of opportunities out there in terms of how it might affect your deductions. You're talking about educational savings. You're talking about retirement planning, estate planning, your deductions in terms of your taxes. So there's a lot of things that are packed into this bill that makes it very exciting for us as financial planners to provide tax planning advice.
Outstanding. And so as far as individuals and their tax planning, as you mentioned, what is the impact on tax rates, federal tax rates?
Alex, you know what? If there's one thing that excites me as a financial planner, it's this one, right? Yeah. Because for the longest time, we've been talking to our clients. When they passed the Tax Cuts and Jobs Act in 2017, we're on the phone bringing our clients in so that we can provide some tax planning for them. Right. And the reason being because that tax law it was supposed to sunset December 31st this year. So you can imagine in terms of chaos that has created because you want to kind of take advantage of that before it expires. But this bill makes it permanent now. So at least it brings a lot of certainty now, and it gives us more time to actually do a lot more tax planning piece. But so therefore, it makes the Tax Cuts and Jobs Act, the tax brackets, to be actually permanent, right? So that's the law now going forward, right? So, but Alex, this could also be something whereby some people try to kind of relax on their tax planning because they could look at it and say, well, hey, it's permanent now. I have more time. Well, you know what? This is the time. Let's act now and then do your tax planning now because it's such a great thing and it brings a lot of stability to the tax rates. Yeah.
Quite right. And so give us an idea of what those tax rates are going to be, or actually in this case, they're going to stabilize.
Yeah, so they're going to stabilize. So what that means is the marginal tax rate the highest tax rate that somebody can pay on their income is going to be at 37%. So
Right.
which was actually down, and then so it goes from 0 all the way to 37%.
Yeah.
Right. And if you look at the historical tax rate, for me, 37% is actually not a very high one. Right. So I think people should really consider taking advantage of this and do some tax planning.
Very good. I think people often get confused about the tax rates and such, and that they often believe they're very, very high. Actually, they're not in a historical sense as we speak, and this act helps to stabilize that.
That's correct. Yes. Yeah.
Very good. And how about the SALT deductions, the SALT deductions? Can you explain that to our viewers?
Yeah, so SALT basically means that state and local taxes. So if you can imagine, I don't know whether you recall the Tax Cuts and Jobs Act when it was passed in 2017. Effectively, what it did was it punished people that lived in, probably we call them the blue states, right?
Yeah.
So, for example, if you live in New York, maybe New Jersey, or even Maryland,
Right.
then your state and local taxes was actually they capped that. They cap it was to $10,000, right? So that means if you live in a state whereby your tax rate, your SALT tax is probably like $15,000, and they cap it at $5,000, then that means that extra $5,000 you're gonna have to pay tax on that. So so that they actually give they lift that a little bit now. They lift it to $40,000, right? So you can they up that to $40,000. But what did they do? What did they do? They put a provision in there, and that provision is up to what up to 2029, and by 2030 it's going to revert back to what, to $10,000, right?
Right.
So yeah, so it's so we need to kind of like dive into this bill,
Yeah.
and then be able to kind of like extract some of these key things, right? So so if you live in a blue state, so obviously it's great until 2029, then it will probably revert back to where it was at 10,000. Yeah.
Quite right.
Yep.
Thank you. And are there any changes to the standard deduction? I would say that would affect a lot of our viewers, maybe all of our viewers.
Yes. So standard deduction. So obviously, when you file your taxes, right? So you can itemize, or you could use the standard deduction, right? So if you think about it, when the law was passed in 2017, majority of the people tend to use their standard deduction because they raise it, right, instead of like itemize, right? So yeah, it makes those standard deductions to be actually permanent, right? So for example, if you're married filing jointly,
Right.
you can now claim up to about like $31,500. So which is a good thing. At least it makes that big standard deductions to be permanent now. Yes.
Right.
So,
And provides, again, some stability in that, part of tax planning.
absolutely. Absolutely.
Very good.
Yep.
Well, thank you. So there's some old things that are now new things.
Okay. Yeah.
One of them being about buying a vehicle. Can you tell us about some of the changes in that?
Wow, Alex. So are you in the market to buy a car, right?
I am not, but my son is. But I am not.
Yeah, well, I've got calls about this, right? I've got calls about it. People were like, "Well, Mamadou, well, I heard this. I heard that you can now deduct your interest and tax. I mean, your car loans and all of that, right?" So, okay, yeah, well, not so fast though, right? Because there are actually stipulations in there, right?
Yes.
So, you can deduct the interest and the cost, but then the car would have to be assembled in the U.S., right?
yes.
So they put some stipulations in there. So make sure that when you're buying a car, just make sure that you go talk to your accountant, right? Or at least they can kind of like, dive into it and be able to give you
Sure.
some more specific stuff in there, right? And I think that also is kind of like, it's limited, right? So if you look at it, you probably say interest on new car or loans are up to like, $10,000. So you can deduct up to that. But it has to be if the car is a U.S. assembled, right? And then service as a loan, as a collateral, right? So, so this applies to from this year, 2025, all the way to 2028. And then it can kind of like help you to reduce your taxable income.
Sure.
So if you're in the market to buy a car, maybe it's a time for you to talk to your financial planner or maybe your accountant and then be able to see whether this is probably a good time for you, right? So, yeah.
Most certainly. Very
Yep,
good.
absolutely.
Great information. So how does the One Big Beautiful Bill Act affect estate planning? Because I'm sure that's a lot of our listeners and viewers, that's very much top of mind.
Yeah, Alex. So this is a big one. This is a big one because estate planning is the worst nightmare. Nobody wants that, right? They say you walk in and pay taxes and die, and then obviously you have to pay a tax on that, right? So again, they made the 2017 the Tax Cuts and Jobs Act. They make the estate taxes exemption to be permanent, right? So what it happens, it increases to $15 million, which is kind of like permanent now. So for majority of Americans now, virtually they can go without any estate issue, right? So this is big. But, as you know, we have clients sometimes that are actually, have like higher net worth than that. Obviously, we have to make sure that we understand what it is and so that they can make the right planning in there, right? So, but you can now also whether you are looking into maybe like gifting, charitable inclination, right? These are all different things that you can implement from your tax strategies point of view, right? And then we do quite some of those right over here in terms of high net worth clientele that are looking to minimize their overall tax burden.
Of course.
But the great thing is the estate taxes is increased. The increase is permanent now, so we don't have to worry about when is that going to end, right? So it also gives opportunity for a lot of Americans to actually do some planning. Yeah.
But really a great time to, if for someone who hasn't already, to really start that estate plan conversation. Now is the perfect time to do that.
Yeah, absolutely. Yeah.
Oh, very good.
Yeah.
Well, thank you.
You got it.
Now, you mentioned charitable giving, and so maybe talk a little bit about that. I think a lot of our listeners are very interested in how they can help communities and how that figures into their tax strategy.
Yeah, so Alex, what I always tell clients, right? So you should not give money to charity because of tax deductions, right? So I think first you want to be charitably inclined to be able to help, and then that comes with getting some sort of tax benefit for it. So I think what makes this bill a little bit more interesting is so for people that don't itemize, right? They can now deduct up to $2,000 in their charitable contributions, right? Starting after 2025, right? So this is a permanent change, and it encourages a broad participants in philanthropy, right? So a lot of people that could be actually doing this. We're talking about donor advised funds, charitable, qualified charitable contribution deductions and all that. So this will actually come into play big for this year, right? So this is actually a very exciting thing from a tax point of view, right?
Oh, that's outstanding. Yep. So how about the youth? How about the young folks? So are there any tools that have been built into the One Big Beautiful Act that could benefit youth, particularly their higher education?
Yeah, so obviously the bill comes with new incentives, right? So if you actually you can make IRA contributions before age 18, and distribution starts the year they turn 18, right? So these accounts can be used for educational, home ownership, and different things, right? So there's a lot of things out there from a youth point of view that I'll probably encourage all of you to, if you have kids, please encourage it. You yourself go to your financial advisor and then dig into some of this so that you can take advantage of some of these great benefits in the bill. Yeah.
Oh, that's great. Thank you. Now, we have a lot of clients that are business owners. What's happening with the QBI deduction?
So the QBI, so basically that's called the Qualified Business Income Deduction, right? So the 20%, which basically you can deduct up to 20% Qualified Business Income Deduction, is now permanent, right? Yeah. So obviously we had that, but it's permanent now, right? So which is a great thing, right? With expanded phase-out threshold. So obviously there's going to be some phase-out thresholds when your income hits a certain level, right? So you want to make sure that you do talk to your financial planner or your accountant for that, right? There's also a new 400 minimum deductions for those with at least $1,000 in QBI, right? So that's also another big thing out there. So again, I think, what we should take from this is great opportunity here. Make sure you go meet with your finance advisor, especially if you're a business owner, to make sure that you can kind of like dive into this and then be able to, make sure that it can advise you to do the right thing. Yeah.
It's outstanding. So any final thoughts on how people should, react and respond to some of the changes that are happening?
Yeah, so Alex, so if I put my finance advisor hat on, I'd probably say, this is a great time from a planning point of view. It's an opportunity that we've had, right? For the longest time, we thought that the tax law is going to sunset in December this year. So now that we know that it's permanent, right, if anything, it should excite all of us for us to reach out to our clients as finance advisors, but also I want clients to also reach out. Or if you don't have a finance advisor, let us know. We're more than happy to have a conversation with you and then be able to guide you to do some tax planning strategies out there, right? So so when you think about it now, it's whether this is time for you to revisit, whether it's your tax bracket management, right? We're talking about estate planning. What are you talking about? Charitable giving, right? These are opportunities for you to be able to take advantage of and then be able to make a profound impact, not only from your community on charitable gifting, but also for you yourself, so that you can enjoy the fulfilled retirement that you've always wanted, and then be able to pass on to your assets to your loved ones in the manner that you wish, right? So a great opportunity for you to actually take advantage of, right? So I encourage you, now is the time. Don't wait on this. Reach out to your finance advisor. If you don't have one, I'm more than happy to talk to you and then be able to guide you. We have a very, very structured and disciplined approach called the Retire Happy strategy that we can walk you through, and it is designed to help people to move forward and be able to realize their financial dreams, right? And then be able to retire happy. So when you act, you can definitely make a profound difference in your financial life, and then we're here to help.
Outstanding. Well, thank you so much for your time, Mamadou, and to our listeners and viewers. Reach out to us if you feel you need to, or talk to your financial advisor or planners. And we want you all to retire happy, and that's our mission. And we thank you for your time.
Until next time, keep planning.
Until next time, stay informed, stay financially savvy, and keep shining as the backbone of our great nation. This has been Retire Happy, your benefits and your future. We've got you covered. Axiom Value Wealth Management LLC is a registered investment advisor. This platform is solely for informational purposes. Investing involves risk and possible loss of principal capital. Likes, endorse, and approve are not intended to be endorsements of our firm, our advisors, or our services. Please be aware that while we monitor comments left on this page, we do not endorse or necessarily share the same opinions expressed by site users. While we appreciate your comments and feedback, please be aware that any form of testimony from current or past clients about their experience with our firm is strictly forbidden under current securities laws. Please honor our request to limit your post to industry-related educational information and comments. Third-party rankings and recognitions are no guarantee of future investment success and do not ensure that a client or prospective client will experience a higher level of performance or results. These ratings should not be construed as an endorsement of the advisor by any client, nor are they representative of any one client's evaluation.